Welcome to SmithWeekly Discussions, an occasional program for our readers and listeners of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine the show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at Smith Weekly, including Jackie A., Jared W., and Paul M. On the show today is Dan O'Flaherty, CEO of Maverix Metals, a precious metals-focused royalty and streaming business that currently holds about 13 cash-flowing assets with 80 total royalties over 16 jurisdictions. The company is listed on the New York Stock Exchange under the symbol MMX, and also on the Toronto Stock Exchange under the symbol MMX. Dan, thank you for joining the show.
Good day, Andrew. Thank you for having me on.
So Dan, why don't you give us, the audience, give us your background in this business and also tell us about the early conversations that took place that has now resulted in Maverix Metals.
Oh, certainly. Well, I've spent my entire career in the mining sector. For the first 10 years, I worked in investment banking, working on mergers and acquisitions of mining companies. And during my time in the investment banking sector, we did a lot of work advising royalty and streaming transactions, including Wheaton Precious Metals when they were formerly Silver Wheaton. We did a lot of work in the advisory space. I got to know Jeff Burns at Pan American Silver. He spent 12 years as a CEO of Pan American Silver. And in 2015, Jeff decided it was time to try something different. And in his transition from CEO of Pan American Silver to the now CEO, Michael Steinman, Jeff realized that there was a number of royalties buried in the Pan American Silver portfolio that were getting no value in the market. So he went to the board of Pan American and the chairman, Ross Beatty, and suggested, why doesn't Pan American take these royalties, spin them out into a separate vehicle to daylight and surface some value? And when I stepped down as chairman as CEO of Pan American Silver, I could steward Maverix as chairman. And during that transition, Jeff called me, knowing that I had a history of working on precious metals, royalty and streaming transactions, and asked if I'd like to join him in getting that started and launched. And we formally launched in July of 2016.
Yeah, that sounds great. Certainly interesting kind of the story there that flowed from it and how the company kind of got set up coming out of Pan American. So through your experience this far, Dan, what has really worked well in the royalty and streaming business and what has failed to work?
Well, that's a great question. I think as one of the newest entrants to the precious metal royalty sector, we've had the benefit of the entire history and looking to see what has worked and what hasn't worked. I think the biggest thing for what works is when it's mutually beneficial to both the royalty company as well as the underlying operator. I think that's where the best transactions are, when it's real win-win, when the royalty and streaming company can provide financing that unlocks value and potential at the underlying operation, whether it's through an expansion, whether it's through exploration, whether it's through construction, or whether it's simply through balance sheet strengthening to really provide working capital to that underlying operator. I think that's where both companies benefit. And for the royalty company, we get the benefit of that expanded and enhanced production from the operation. I think where things have been challenged, I think there are a couple of avenues. One is when too much of the economics get taken by the royalty or streaming company. That provides a disincentive for the underlying operator. So that's something we actively look to avoid. The other big item where some of the companies can run into trouble is really investing in challenged assets where the technical due diligence isn't there. And I think that's one of the aspects that Maverix has is a very strong technical team to really address and kind of assess those risks on the underlying resource.
Well, Dan, where are we today in the natural resource cycle with relation to gold, other precious metals, and also perhaps base metals? What is your view over the next few years with regards to this market price and sentiment?
Yeah, well, certainly I'll start with gold. That's certainly what I'm most familiar with and what Maverix's absolute focus is. We've recently seen a run-up in the gold price from a roughly, the $1,200 range to now the $1,500 range most recently. And with that run up in the gold price, one thing that's different than past cycles is the gold equities haven't moved as rapidly or as quickly or as high as they did in previous gold price movements of, call it $300 an ounce. So I think there's still, a significant lift to come in both the gold price as well as in the equities. One thing with the gold equities as well is, despite the gold price now trading above $1,500, we haven't seen a lot of generalist money come into the sector. And I think that a couple of reasons for that. One is this: the generalist sector, is doing very well. So until there's a correction, a pretty substantial correction in kind of the Dow and the S&P, a lot of generalist investors just haven't felt the need to rush back into gold. But what that is a huge opportunity, because when those taps do get turned on and money does come rushing into the sector, I think you could see some pretty substantial moves in the gold equities as well as the gold price.
Any thoughts on, and I know Maverix has a little bit of exposure to things like silver and some base metals. Any thoughts there?
Yeah, certainly. I mean, we like very much silver as well. Our portfolio right now is approximately 95% gold and silver. I think silver will also move with gold. It has already in terms of the price. I think it will continue to move. Silver can be much more torquey or a little bit more volatile than the gold, but I also see that as an upside. With respect to the base metals, touch on copper a little bit. There's obviously a little bit of a short-term crunch on copper with the kind of the trade discussions between China and the United States. But I think longer term, I see a real potential in copper, mostly with the respect to the electric vehicle movement. A lot of talk gets made about nickel and cobalt, but really copper is a pretty substantial component of the electric vehicles. So I do think there could be some movement in copper as well, and more in the longer term than the short term. I think in the short term it'll continue to struggle just with kind of the global tensions at the moment.
Well, what needs to happen in the natural resource sector, and we'll just talk about precious metals a little bit here for that sector. What needs to happen in that whole sector going forward? What are the top concerns that you're seeing in the market that need to change, and how might we get there?
As a general comment, I think most operators should be pretty happy with $1,500 gold, which yes. Just looking at the chart today, trading at $1,510, we should, those operations should be making money and should be cash flowing and providing returns to shareholders at that gold price. And anything beyond that is I would say, just additional upside.
Yes. So how does I want to move on, and let's say, Dan, that the bull market runs and we have a much higher gold price than where we are today. How does Maverick see handling the heights of a bull market cycle when prices are high and wasteful capital decides to come in, and wasteful decisions that are made in the sector that happens typically at the heights? Are you of the opinion that accretive deals are done with capital during the lows in price and sentiment? And how will Mavericks handle the situation when it occurs?
I think that's a great question. I think there's deals to be done in any price environment, but I think it's very important to be prudent, and that's essentially not overpaying at the top of the market for the sake of growth. In Mavericks' portfolio right now, as it is, we've got 80 royalties, 13 of which are cash flowing in much higher gold price environments. A number of those royalties that we have assets on that aren't producing, they're going to be developed, they're going to be constructed, and so we'll have natural growth that way through the spending of our underlying operators on their underlying assets for the benefit of their shareholders. We get that free option on new mine construction exploration, so we're not forced into doing a crazy deal at the top of the market. So I think we'll be very very prudent in terms of what we're looking at in higher gold price environments, and in lower gold price environments, there's a substantial amount of opportunities to deploy capital, because capital is not necessarily available for a lot of the underlying operators directly, and that's where the royalty and streaming companies can provide a conduit to that capital.
So we've seen this business expand over the other natural resource sectors, including things like oil and gas, base metals, as we mentioned, and also specialty metals. Franco-Nevada has recently kind of been an example here where they've expanded out a little bit. When you see significant value propositions in other metals, do you believe it is prudent to consider taking some other deals when the math is overwhelmingly in your favor?
Well, that's one. First of all, commend Franco-Nevada. They've done a tremendous job of kind of as an industry leader in the royalty and streaming sector. And they have the benefit of that such an immense size where they have the benefit that where they can do other deals as long as and specifically in the oil and gas sector, where as long as they keep a row of 80%, that's typical of the number they say in precious metals. That's where they'd like to focus. For Maverix, as a growing vehicle, our focus is absolutely on precious metals. To the extent that there is some sort of specialty metal where the math is overwhelmingly in our favor, we'd have to take a look at it. But I can say we wouldn't want to, as I mentioned earlier, we're 95% gold and silver now. We wouldn't want to impact that too much. And our specialty and institutional knowledge and technical bench strength is all primarily in the precious and base metals as well.
Right, and I think it makes sense to keep a huge, quite a significant base in that sector. I think that's probably the place that really makes a lot of sense.
Well, that's what our investors and our shareholders like. They like when we go marketing and we say we're above 90% gold and silver. That gets received very well. So I think that's our target audience. So that's what we're going to continue to target.
Right, it's a good place to be. So let's talk a little bit more about Maverick specifically. What is your approach to value creation at the company, and how are you aligning your interests with that of the shareholders?
In terms of aligning our interests with the shareholders, I can say that management and the board and insiders own 11% of the company. So it's very strong kind of insider ownership. So I would say we're very heavily aligned. The one thing that we've been able to do through growing our portfolio is we have a very diversified asset base. While we have 13 paying royalties, not a single asset contributes more than 20% of our cash flow. So we're very well diversified, and I think that's how we'd like to continue to grow the portfolio, is precious metals, producing, and also in terms of where we're looking at assets. I can say that over 90% of our revenue comes from Canada, the United States, Australia, and Mexico. So we're very much focused on mining preferred geographies. I think that's what our shareholders like us doing, and that's what we like to do as well. So I'd say we're fairly heavily aligned in that sense.
And tell us about the key management team you have there and what process you go through when evaluating deals in the business. Kind of give us an idea what you guys look for, how you seek out people, or if they are knocking on your door, and kind of tell us how the clients are sourced as well.
Certainly. First of all, a lot of credit is due to our chairman, Jeff Burns. Having spent 12 years in the CEO role of Pan American Silver, one of the world's leading silver producers, he has developed quite a very deep Rolodex, which has been very helpful as we've kind of grown the company from when we launched in July of 2016 to today. I would say we have two very large shareholders, Pan American Silver at 26% and Newmont Gold Corp at 28%. It's been very beneficial to have that brand endorsement from very large mining companies. We've also had many connections, potential deal flow come through our shareholders, as well as our technical due diligence team. We have two engineers with us internally, constantly evaluating projects, as well as an investment banker that I worked with at Scotia, who's very much looking out on the deal front and structuring there. So we have a very deep pipeline of M&A opportunities, and I would believe that this is the busiest we've ever been since we've launched the company.
Okay, and Dan, can you expand a little bit on what you guys are really looking for at this moment in the market? What deals are you seeing that you guys are going after? Is it stuff that's producing quickly, or what's the status on what you're focused on?
Certainly, it's actually a very simple strategy. It's precious metals, as I've mentioned. It's mining-friendly jurisdictions. We're looking for assets that either producing or with a clear path to production. We're not looking at a lot of early stage exploration assets. We do have that in our portfolio with the 80 royalties that we already have. We're looking for long mine lives and experienced operators. And I think one of the most recent deals that we've done is a great example of this. We invested $40 million to expand our 1% NSR on Hope Bay, on the TMAX Hope Bay mine. We expanded that from 1% to 2.5%. And this is an asset that has a 20-year mine life. It's a world-class gold camp. It's in Canada. it's already producing, it's ramping up. So this is an asset that we very much like. It absolutely fits the profile of what we're looking for, producing gold in Canada, very long mine life, and that's something that's going to be a part of Maverix for decades to come.
And can you kind of speak to the size? Are you looking at kind of the similar deals that you've done in the past, or can investors expect something bigger? What kind of speak to the capital size you're looking at, and if you're looking to do it in a leveraged way for faster growth, or how is that approached?
Well, that's actually one of the ways we've been able to grow the company. Is essentially right now we're the only precious metals royalty company between a market cap of around 200 million and 1.2 billion. So we're the only precious metal royalty company in that sector or in that size range. So we've been able to target royalties that are very meaningful to Maverix, but don't necessarily move the needle for the larger players in the space. So I'd say, in the 30 to 50 million dollar range is really kind of the core strike zone of what we're looking at. We're looking at some that are larger, some that are smaller, but that's kind of the sweet spot of acquisitions that we're focused on at the moment.
Okay, yeah, that sounds good, Dan. And I want to talk just for a moment. I want to ask you a little bit about maybe when you look at the sector and you look at the Francos, the Wheatons, the Royals, the Secos, more closer to you, the Sandstorm, and then some underneath you, like the Metallo royalty, has also gotten a little bit of attention. Speak to maybe a competitive advantage that you guys really have, and why investors need to look at Maverix as really one of the cornerstone royalty companies to look at.
No, that's a great question, and I'd like to commend Franco and Wheaton Precious and Royal Gold, and obviously a Cisco, Sandstorm, and Metallo. I think the sector has been doing very good transactions. I think where we are as Maverix, as I mentioned, we're in that kind of unique size range between a Metallo and between Sandstorm, where we have a significant amount of scale in terms of 80 royalties, 13 of which are paying. We are cash flowing pretty meaningfully, but we haven't built our capital markets profile as much as the larger players. And what I mean by that is, we've historically had very low liquidity, which is, in my opinion, had us trading at a discount. To address that, we just listed on the New York Stock Exchange American, as you mentioned at the introduction, under the ticker MMX. So we've got the New York Stock Exchange listing. We're continuing to grow our liquidity. I think we have a number of steps ahead of us that are pretty exciting. Dividends are a sector, or a staple in the royalty sector. We haven't had that yet. I think that's something we'll strongly look at. We're continuing to increase our research analyst coverage. We're continuing to build a portfolio, and we're continuing to build that liquidity. Our liquidity is up pretty substantially since listing on the New York Stock Exchange, and I think we're continuing to grow. And as we continue to grow that liquidity and put another dividend, or put a dividend in place and grow the portfolio, we'll ultimately get to the size where we'll be able to be included on one of the indices, whether it's GDXJ or whatnot, and that is essentially forced buying. So what's exciting for us is these steps are all in front of us. Companies like Franco-Nevada, they're already very highly liquid on the New York Stock Exchange with a tremendous amount of access to capital and coverage and index inclusion. For Maverix, each one of these steps is in front of us, and that's incremental. And I think each one of those steps will kind of unlock value as we grow the company.
Okay, and yeah, I believe Maverix has been in the SmithWeekly portfolio, I think since not very far, maybe a few months after you guys listed.
Thank you. Congratulations. That's probably been a positive ride.
Yes, from the TSXV all the way up. So it's been an interesting experience. And when you guys continue to bring in the capital and the decision about paying dividends comes, or maybe the stock price is undervalued, how are you guys going to look at that? Are you going to look at basically retaining the leverage, getting rid of maybe some of the debt, paying dividends, or maybe buy back shares? Is that kind of all on the table? How do you look at that?
Well, I think everything's on the table, depending on what we're doing internally as well as what the market's doing. I think as I'll make a number of high-level comments. One is we have a tremendous amount of opportunities that we're looking at. So in terms of deploying capital, we have opportunities to deploy capital, and ultimately our shareholders first and foremost want us to deploy capital to continue to grow our portfolio. With that being said, generally I do believe in returning capital to shareholders at some point, and I do mention that dividends are a staple of the royalty sector. So at the appropriate time, I think we would like to consider a modest dividend while still retaining the vast majority of our cash flow to deploy into growth. From a debt perspective, there's always we currently have a US $75 million credit facility with CIBC and NBF. I would say that it's nice to have access to debt. I wouldn't want to over-lever the company at any point. I think we have opportunities to grow through our cash flow without putting too much debt into the situation.
And Dan, can you share any major milestones that you see coming down the pipe for the company over the next 2 years? What's a big asset that might be coming on for Payne over the next 2 years? And can you share a little bit of insights there on the projects that are key coming down?
I think we've had significant growth in the past couple of years. In 2017, we had gold equivalent ounce production, GEOs, to Maverix's account of 12,000 ounces in 2017. 21,000 ounces in 2018. We're going to exceed that here in 2019. And we've got a number of royalties on assets that are currently in ramp-up mode, including the Beta Hunt mine in Australia, Silvertip in Canada, Moss in the United States, as well as Hope Bay in Canada. So we'll see a number of incremental growth through those already producing operations. On the capital markets profile as well, I think with this New York Stock Exchange listing, we're going to continue to drive our liquidity. I think, this time next year, I'd like to be talking about, having a dividend in place, starting to be included on indices, GDXJ, for example, increase the portfolio. I hope this time next year we'll have done, at least one or two more M&A acquisitions into the portfolio. So I think that's the path that we're currently on right now.
When do you see the company getting to, with the current schedule, you have a good idea here. When are we going to get to that 100,000 gold equivalent ounces? Maybe in the next 2 years?
Oh, that's a pretty lofty target. I mean, this year, I think, we have guidance up to 24,500 ounces this year. I think it'll take some construction of some of the projects that we have in our portfolio, the royalties on that is, as well as some M&A acquisitions to get there. But 100,000 is a pretty high target. I think we're focused more on steady growth at the moment.
Okay. No, I just wanted to kind of get a feel for how aggressive it could potentially be there, and just kind of with the group there and some of the associations with Ross Beatty and some of the work he's doing with Equinox and some of the other businesses out there. It's just always wanted to twist your arm a little bit and find out what you got.
I'd certainly like, I'd like to grow. It's a matter about growing responsibly and accretively.
Right.
In terms of, we're more focused on per share value for our shareholders than just kind of market cap. So I think that's absolutely our focus. But Ross is doing great things over at Equinox as well, and I think there's going to be a lot of activity in the sector, both in the royalty sector and in the general sector, particularly out of these mega mergers, with Barrick and Randgold and Newmont and Goldcorp. I think we'll see some assets come out. So it's going to be very interesting to see where they all go.
Right, and absolutely, and I know that Equinox has Newcastle is going to come down the pipe here shortly, and then maybe an expansion at Arizona, and so there's always some capital needs there. So if Hope Bay and these projects go on time, Dan, can you? You already know it because you have the models in front of you, have the information. But if these things come online on time, how does that affect your current 25,000-ish gold equivalent? When those come on.
Yeah, and Hope Bay is producing. It's going to do about 160,000 ounces this year. I think our long-term forecast is north of 185,000 ounces. So it's more just ramping up production at that specific asset. But as I mentioned earlier, we have guidance up to 24,500 ounces this year in 2019. We haven't given formal guidance for 2020. my expectation is probably, without having looked, I don't have the model in front of me, but it's probably in the 30,000 ounce range, and then higher in 2021 beyond that. And that's without any further acquisitions, which I would hope that we can actually add to that through M&A.
Absolutely. So Dan, what is the end goal at Maverix? Is it to be a long-term standalone royalty and streaming business, or do you see that the Royal Franco Wheatons of the world will look to roll up some of the juniors during the heights of this cycle?
That's a great question. I mean, first and foremost, our focus is on growing the vehicle. We see lots of opportunities to grow, or we've had a track record of growth. I see future growth. With that being said, consolidation is very natural in the royalty sector. We've seen in past cycles a number of royalty companies get acquired, whether it's Silverstone, Gold Wheaton, IRC, Premier. You've seen a lot of names that have been consolidated into the larger guys. So I think absolutely that's a potential outcome. We certainly don't have a for sale sign out on the yard. Right now we're just growing the business, but I do see potential for consolidation in general in the royalty space.
Right, and we saw Ross do that last cycle with Lumina, where they spun out some different copper royalties and different royalties out of that company as a separate business. Dan, for potential investors and the audience listening, why should they be looking hard at Maverix Metals today?
I think it's twofold. One is the royalty sector in general is an excellent place for investors to get high quality exposure to the commodity prices with a much more diversified platform. Right now we have our revenue for this year should be around $40 million Canadian. We've got operating margins of approximately 90%. So it's a very high margin business, but also with the significant upside to gold. And where that upside comes from is all the royalties that we have on assets that are in our portfolio that aren't producing yet, that in rising gold price environments are going to be built. And that gives investors significant torque with the downside protection of a diversified asset base and high margin business. In terms of Maverix specifically, I think we're in a very great position. We've got a number of steps just in front of us that I think are going to unlock value. We've just listed on the New York Stock Exchange. We've got an ability to really continue to do deals that are meaningful and move the needle for Maverix that don't necessarily move the needle for the larger guys. And there's steps that we can take to build that liquidity, get included on index, get a dividend out there. And each one of these, I think, will really incrementally unlock value. So we can do transactions that really increase our per share value, but also get that, torque on the multiple expansion by expanding our multiple.
Yeah, that sounds great, and I agree, and we share a similar view. I thought of another question here for you. With you guys doing these deals, tell me about the downside when it comes to potential problems with construction and these potential defaults on certain things when things just don't work out. Can you kind of speak to what position does Maverix seek in a situation where you have an issue with an operator and a project's just not going according to plan? What kind of position do you seek there as far as the teeth of kind of the downside? How do you protect the downside on your deals?
Yeah. Well, I think that is an excellent question. The first thing that we do, and this is taking a step back, is incredible due diligence on the front end. And that means that we try not to get into deals that we think are obviously going to fall apart. In terms of the due diligence and doing that, risk mitigation on the front end, the most important aspect is the resource, is what is in the ground and is it there, and can it be mined profitably? So I think doing that due diligence on the front end really protects you on the back end. I think it's, don't remember the expression, is that an ounce of prevention is worth a pound of cure in terms of doing due diligence on your transactions. With that being said, for the protection, and this is kind of for most royalty and streaming companies, streams, they do come with security on the asset typically, and royalties are generally registered on title, so they go with the land in the event of a bankruptcy.
Right, absolutely. No, you got to have some teeth there, and I think you covered it quite well, because essentially, I won't speak for all of the royalty and streaming companies, but there are a select few who really do have a good technical team and do amazing due diligence to where even your retail investors can follow the royalty companies and get a good idea of what is really solid out there in the market, as far as you can look at what you guys are doing for deals and they can make decisions. And so I think that's key as well. So Dan, wrapping up here, how can potential investors reach out to the company to learn more about the company and also perhaps contact you or the investor relations team?
Certainly. Well, our website is www.maverixmetals.com, M-A-V-E-R-I-X, metals, M-E-T-A-L-S.com. So happy to visit us there. We do have a contact us. Alternatively, the info@maverixmetals.com email address. Welcome all questions. Always happy to engage with shareholders.
Well, Dan, thank you for the insights and thanks for taking the time with us today. Good luck over at Maverix.
Andrew, thank you for having me on, and appreciate the audience listening.